Welcome back. You're still with us on Markets Today. Let's get to the rest of the headlines that we are tracking for you. The fourth headline today, Nestle India's beat street estimates with profits rising nearly 25% year-on-year. This is the highest growth rate the company has reported in a decade, despite the impact of rising milk prices on the margin. Mangla Malu is here with the details on this.
Well, Nestle reported a bumper first quarter calendar 2023 numbers, and that's primarily led by the company's top line, which was above street expectations by a mile. We saw a revenue growth of 21.3% in the company's overall sales, and as a result of which it's the highest quarterly growth that the company's posted in their top line in over a decade. Also at the same time, the EBITDA at an absolute level and the net profit at an absolute level were much above street expectations. EBITDA just shy of that 1100 crore mark, and the net profit a little over 700 crores as well. The reason why the stock did not react strongly on the upside are two. There are two reasons. The first one is that we had already seen a big move in the stock price before the numbers, and secondly, the margins were a tad below street expectations, about 30-40 basis points lower than expectations and 70 basis points below the same time last year as well. And that was on account of raw material inflation that we've seen, especially in the milk and milk products universe, where 30 to 40% jump has caused a bit of a dent in the company's gross margins as well. The management alluded to demand recovering going forward, a volume growth of close to around 5% and if you discount the low unit packs of Maggi, the volume growth this time around has been around 11 to 12%. So strong sales environment. The costs, they believe, that will remain firm, especially on the side of milk over the next few quarters.
Okay, all right, Manglam, thanks very much for that. Let's look at the other stocks that were in focus today. On the back of their quarterly numbers, Nelco soared in trade and ended the day over 12% higher after the company reported an 86% year-on-year jump in net profit for the March quarter. Meanwhile, Mahindra Logistics was under pressure due to weak earnings report. Reema's here with the details.
Big move from Nelco today. One, of course, the numbers were strong. But two, the stock has also been an underperformer. It slipped more than 40% from its recent 52-week high. The 52-week high on the stock was 1,090 that it hit in September of 2022. So the stock has been a drag. And now that you got good numbers, a 10% quarter-on-quarter revenue growth, 14% improvement on a year-on-year basis, and revenue growth for the company had slowed down in Q3 and Q4, and it finally picked up in the March quarter. Margins expanded on a year-on-year basis, but stable on a quarter-on-quarter basis, standing at 20.5%. Even for the full year, EBITDA margins have come in at 19%, which is a pretty healthy number. The other one that we're tracking was Mahindra Logistics, and that ended the session in the red. Now, if the full integration of the Rivigo acquisition, which was done in November of 2022, dragged the profitability of the company. So while the top line growth was strong at 17%, the margins also expanded on a year-on-year basis. At the bottom line, there was a loss of 82 lakh because the company reported a higher depreciation and finance cost on the back of the acquisition.
Okay, all right, Reema, thanks very much for that. Well, let's move on. Auto major Bajaj Auto is set to release its numbers for the fourth quarter. Sonia joins in with the key street expectations.
Well, thanks a lot for that. So Bajaj Auto is expected to report a mixed quarter this time around, purely because the domestic growth will be offset by weakness in the export market. The domestic two-wheeler segment has seen a very good growth in excess of 15%, but it's the export market that's under pressure. Two-wheeler export volumes are down by almost 40% on a year-on-year basis. Now, for Bajaj Auto, that will lead to just a single-digit revenue growth. Less than a 5% revenue growth is what we're looking at this time around, while more importantly, the management commentary assumes importance on if the worst is over for the export market or not. All of this will also put a little bit of pressure on the margins, hence margins on a quarter-on-quarter basis will be under pressure. Back to you.
All right, Sonia, thanks very much for that. Well, the fifth headline today, India's fourth largest pharma company, Mankind Pharma's 4,300 crore IPO has opened for subscription. The issue will be available for the public to bid till April 27th. The street will be watching out for the IPO, considering that it is in fact got very strong brand recall. It has two segments. Pharmaceuticals is basically 90% of the business, but the company gets around 8 to 10% of sales from consumer healthcare. And remember that the consumer healthcare business does have important brands such as Manforce, as well as Prega News, as well as Unwanted 72, so strong brand recall. Just a couple of more details. They have received a lot of interest from anchor investors. 77 funds allotted 1.2 crore shares at the upper end of the price band. They do get majority of their sales from tier 2 cities, as you can see, around 47% versus the industry, which is low at 37%. Chronic care is around 33% of their sales. They are growing that particular segment. Strong growth because 15% revenue CAGR in the past 2 years, 29% EBITDA CAGR, 17% profit, and it is a no debt company as well. A couple of challenges: competition, considering that they are now aiming at tier 1 and metro towns. The 9 months FY23 margin dropped due to high input costs. There is concerns with regards to the payback on the Panacea Biotech acquisition, which they did make for around 1,800 crores. And they have limited outsider presence when it comes to the top management. In terms of PE, FY22 trailing PE is at around 29 to 30 odd times. And that compares to the likes of Sun as well as Cipla, and is more expensive than the likes of Alchem. So the street is basically, so they are undertaking a premium and they are in line with the likes of Cipla as well as Sun. And that's basically, the key competition that the street envisages going forward for Mankind as well. We did speak to the management. Let's listen in to what they had to say.
Gross margins of Panacea are more than Mankind. And once these products will be shifted, manufacturing will shift in our own factories, gross margins will further improve. Keeping everything in mind, this is a fantastic kind of a acquisition. This is basically one organization which is not properly, its products are not being properly utilized, exploited to the fullest. We feel we can do wonderful with this. We are a domestic company. 97% sales of Mankind comes from India only. So 97% focus is India. And we see, as far as the consumer products are concerned, it's not number of products which matters. It's basically, the same products, how big it can become. So look at Mankind or Unwanted or Braga News. There can be a question that Braga News commands 80% market share, but people do not know. We are doing fantastic in metro. We are doing very good in rural.
All right, well, let's look at some other stocks that were in focus today. UPL slipped in trade on the back of weak quarterly earnings and a cautious commentary from the global agrochemical major Adama, which triggered concerns of a similarly weak quarterly performance from the firm. Meanwhile, Mahindra Life Spaces gained on the back of a new project win. Sonal Bhutra is here with the details on both these stocks.
Thanks a lot for that. Well, UPL is in focus because the global agrochemical company Adama reported its Q1 calendar year 2023 numbers, and they did not look so good. Even the commentary was on the muted side. First, let me run you through the numbers because revenues were down 11%, EBITDA was down 18%, adjusted profit was higher at $22 million. But in terms of their commentary, the company did say that Q1 continued to see decline in crop prices. If crop prices decline, that means lower demand for agrochemicals as well, and that is something which would have hit their numbers as well. They say quarter saw early purchase due to product availability concerns and supply shortages. So the supply chain is also seeing some problems right now. Customers are in a wait and watch approach for crop protection purchases. So they have actually delayed some of their purchases across the globe. And the similarity here is that UPL also caters to the same geographies that Adama does, the likes of North America, Latin America, Europe and India as well. So that's where the stock is seeing some cuts right now. On the flip side, Mahindra Life Spaces is in focus because they've won their second redevelopment project in the city of Mumbai. They call it a big opportunity as well. This is for a society redevelopment project in suburban Mumbai, that's in Malad. The revenue potential is around 850 crore rupees for the company, and they are going big on redevelopment as well. So that stock is higher in trade today.
Okay, all right, Sonal, thanks very much for that. Well, back to pharmaceuticals. The pharmaceutical company Ipca Labs is acquiring more than 33% stake in Unichem Labs at over 400 rupees per share for around 1,000 crores. Now, the deal is that they will be acquiring 33% for 440 rupees per share. They have also approved an open offer which will amount to around 805 crores. Now, in terms of the particulars of the deal, remember that what exactly does Unichem bring to Ipca? in terms of this particular acquisition. Unichem, remember, had sold its business, its domestic business, to Torrent Pharma in 2017 for 3,600 to 3,700 odd crores. Now it has retained only its international formulation business since 2017. 55% of that international formulation business, in fact, comes in from the US markets. So Ipca will inherit or access the US markets. They will also get 3 formulation and 3 API facilities. They will get facilities which are US FDA compliant. Why is that important for Ipca? Is because Ipca has 3 facilities which have been under the US FDA scanner since 2015, and they have not seen any kind of movement on those facilities in terms of compliance. So this will give them access to the US markets, but the street did not like the acquisition. Ipca Labs ended lower by around 10% odd. The reason is that the company, the street is worried that they're paying a high amount for what is an expensive asset. And the numbers have been sluggish for Unichem. For example, they did incur an EBITDA loss for 9 months FY23 as well. So the street is worried that the entire acquisition will eventually be margin dilutive. So these are a couple of worries for the street, and hence you can see that Ipca ended lower in today's trading session. Unichem was higher by around 0.6%. With that, it's a wrap on this edition of Markets Today. Thanks very much for watching.